Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 6th of December. It's been a very volatile week in the markets. The basic concerns that have been floating around are twofold. First of all, of course, we've had the outbreak of the Omicron variant, which has basically put further cats amongst the pigeons in terms of what had been a stuttering economic recovery. We've already seen some travel restrictions. Airline shares have been fairly weak. The other main area of concern over the past week or so has been central banks and rather more hawkish comments. The Federal Reserve, for example, has intimated that at its next meeting it will be considering whether to accelerate its taper programme. Obviously, if that is the case, that will almost certainly lead to an earlier rise in interest rates than had been expected. All that being said, the markets have maintained their fairly creditable year-to-date performances. The Dow Jones is currently up 13.2%, the S&P 500 up 20.9%, the Nasdaq up 19.3%, and the FTSE 100 up 10.5%. Turning to next week, there's probably three FTSE 100 companies worth keeping an eye out for. First of those is British American Tobacco. It's got a trading statement. Shares down around 6% or so over the last year. The sort of things to look out for here are revenues, and in particular in what it calls its new categories division. That's the likes of e-vaping and heated products. On top of that, keep an eye out for what have been traditionally high operating margins. Any news on the dividend? This is a particularly punchy dividend yield for BATs of around 8.4%, but also how trading is currently faring in its major markets in the US, Latin America, and indeed Asia. Next, there's going to be some half-year numbers from Berkeley Group, the house builder. Shares down about 14.5% over the last year, so not really having taken part in the rally which many of the other house builders have seen. And one of the main reasons for that has been its heavy reliance on the London market. Clearly, during the pandemic, overseas investors went missing, and that's something it's currently trying to recover from. But look out for the normal metrics in terms of forward sales numbers and so on, and also whether there's any update on potential shareholder returns. Finally, jet engine maker Rolls-Royce has a trading update. Shares around 5% down over the last year, although possibly to give you a better picture, if you look back 2 years, the shares are down around 47%. Been an extremely volatile stock over the last year or so, mainly because it's paid largely on hours flown, and obviously the restrictions of the pandemic have meant that has severely dented its income. One of the things that it's now been looking at is strengthening its balance sheet. Around a year ago, it had a £2 billion cash call, which clearly underpins the financial strength of the company. And in terms of this particular trading update, very much a question of looking out for whether cash generation is back on the agenda. Thank you for watching. Have a great week.